Welcome back to the garage. Gang, time for another token teardown. If you're new here, this is where we roll a crypto project into the bay, lift the carbon fiber hood, and check whether it's really packing a twin-turbo power plant or just making noise through a chrome tailpipe. Today's machine on the lift is Tharwa, ticker TRWA. Yes, we'll talk price predictions because everyone wants to know if this thing is about to rip down the straightaway or blow a head gasket before turn one. But first, what does it actually do? Who's using it? And is it even worth giving space in your garage? Before we drop it into gear, hit like, tap follow, and share this with your crew. Your fellow degens, that buddy who just opened his Crypto.com account and now calls himself a DeFi legend, or the coworker who still thinks mining Bitcoin means digging in Minecraft. In this garage, we keep it simple. Is Tharwa the Bugatti class build of DeFi, precision engineered, torque heavy, built to melt asphalt, or just a showroom prop with no engine underneath? Let's find out. Now, before we take this thing out on the open road, we've got to talk about the people who built it, because every great machine needs a world-class pit crew. Tharwa's team isn't a bunch of anonymous handles hiding behind avatars. This crew runs on Abu Dhabi horsepower, and they built this project the same way the city builds its supercars. Precision, power, and no shortcuts. Pit crew founder and chief engineer, Saeed Al Fahim. Saeed's the one behind the wheel. He comes from the Al Fahim family, one of the UAE's most established business dynasties. Energy, real estate, automotive, you name it. Before crypto, he worked inside Taka, the national energy giant, managing supply chain and infrastructure strategy. That's where he learned how to move capital through real assets. Now he's bringing that same structure on-chain, converting hard value into digital yield. Investment director, Hamad Mohammed Al-Mazroui. Hamad's the bridge between family office capital and DeFi. He spent years inside Gulf investment circles and knows how institutional money thinks. He's the one designing the vault strategies that make Tharwa's RWA engine attractive to professional investors, not just traders chasing APY. Legal and compliance chief, Tuxi Orhan. Every hypercar needs brakes, and that's Tuxi. She founded Orhan Legal, specializing in fintech and Sharia compliance. Her job is to keep the protocol clean, licenses, filings, audits, and making sure every THUSD minted can stand up to legal scrutiny anywhere in the GCC. Financial strategist Ali Lari Ali's, the numbers guy, private wealth veteran and structured finance architect. He designs the internal economics, how fees flow, how yields are distributed, and how to keep returns smooth even when markets get rough. If Tharwa were an F1 car, Ali would be the one tuning the fuel maps for perfect balance between speed and control. Regional expansion lead, Suleiman Al-Subai. Suleiman runs Point in Saudi Arabia. He's opening new lanes, partnerships, capital introductions, regulatory meetings. He's the reason Tharwa isn't just an Abu Dhabi project. It's becoming a GCC-wide network, stretching from Dubai to Riyadh. Communications and brand director, Lauren Smith. Lauren handles everything the world sees and hears. She's Western trained, ex-agency, and brings polish to a region that loves presentation. She makes sure Tharwa looks like an institution, not a Telegram experiment. Clean visuals, clear message, investor-ready tone. The quant and dev team? Under the hood sits a dozen engineers and data scientists who built the Confluence engine, the AI Allocator that drives Tharwa's yield system. They're the silent crew in the garage, coding, auditing, backtesting, and integrating new asset classes. They keep the engine running, while everyone else sees the dashboard, backers, and fuel. No Silicon Valley VCs here. Tharwa's funded by its own founders and regional partners. That means no early round dumping and no outside pressure to chase hype. It's slow capital with long-term alignment, the kind that actually builds something lasting. Community and culture. Instead of a big token sale, Tharwa kicked off with its Genesis season airdrop, rewarding early users, vault participants, and liquidity providers. Around 8,000 wallets earned TRWA through actual usage. The tone of the community is professional. Fewer memes, more macro. These are traders, builders, and investors treating DeFi like an industry, not a lottery. Garage note. Picture the Tharwa team like a Gulf Coast racing division, a founder with oil and infrastructure DNA, a strategist with family office precision, a lawyer who can pass any inspection, a finance tuner who knows risk, a regional connector who opens new tracks, and a comms lead keeping it all polished. They're not playing for hype. They're building something that could stand next to a real bank and still win the race. Now that we know who's behind the wheel, let's see what kind of engine they built. Because Tharwa isn't just another coin sitting in neutral. This thing was engineered to move. Tharwa is a DeFi protocol on Ethereum that turns real-world assets into on-chain yield. Think of Ethereum as the carbon fiber frame, and Tharwa as the drivetrain bolted on top of it. Base layer. Ethereum mainnet gives Tharwa security, finality, and plug-and-play access to every major DeFi protocol. Cross-chain system. Layer 0 messaging acts like the transmission, allowing THUSD and its vaults to operate on other chains such as BNB or Arbitrum without fragile wrappers. Data feeds. Chainlink and Pyth are the sensors feeding the dashboard, streaming live commodity, bond, and currency prices directly into the contracts. At the center of it all sits the Confluence engine, Tharwa's AI Allocator. It's basically a self-driving portfolio manager written in code. Here's how it works. It pulls real-time prices and yields from those oracles, runs them through quantitative risk models, value at risk, volatility, yield curves, and constantly recalibrates how capital is spread across the vaults. When gold gets jumpy, it trims exposure. When treasuries start paying better, it leans in. If markets quiet down, it balances for stability. Instead of waiting for humans to rebalance once a quarter, the AI allocator does it continuously, chasing consistency rather than hype. The goal is steady yield, minimal drawdown, an autonomous fund manager sitting inside a smart contract. Vault structure. Each vault is backed by tangible assets, gold, sukuk bonds, treasuries, and real estate, held by licensed custodians in the UAE. On-chain vault tokens mint new THUSD only after those holdings are verified by the oracles. It's a real asset loop, digital on the outside, physical underneath. Governance and staking. TRWA holders stake into STRWA for voting power, and once regulations clear, a share of vault-generated fees in THUSD. Security. Multi-sig treasury controls, automatic circuit breakers for peg stress, and around-the-clock AI and human monitoring keep the system from overheating. So picture the setup like this. Ethereum equals the chassis. Layer 0 equals the gearbox. Chainlink and Pyth equals the sensors. The Confluence engine equals the ECU. And the RWA vaults equals the power unit delivering real torque. This isn't a speculative motor. It's an AI-driven income engine built to run all day, every day, on-chain. Now that we've seen how the engine runs, let's talk about the fuel, the token that makes the whole system move. Because under all that AI and cross-chain tech, Tharwa still runs on one key element, TRWA. And the way that token's built, distributed, and used tells you if this car is built for endurance or just for show. Tokenomics breakdown. Under the hood of TRWA supply and structure, Tharwa's maximum supply is 10 billion TRWA, with about 7 billion already circulating in the wild. That puts its current market cap around $70 million, and a fully diluted value near 100 million. Distribution. 70% goes to the community through liquidity and usage incentives, the people actually driving the protocol. 20% is reserved for growth and airdrop campaigns. 5% goes to the core team, vesting over 3 years after a 12-month cliff. The remaining 5% sits in the treasury, unlocking gradually over 36 months to fund audits, partnerships, and future expansions. No inflation, no mystery mints. Every token already exists. What changes over time is who earns them. Farmers, stakers, and users building the system's liquidity, utility, and flow. TRWA isn't just a governance badge. It's the power link that connects users to the vaults and back. Here's the loop. Use THUSD to earn yield. Receive TRWA as rewards. Stake TRWA into STRWA. Gain voting rights, and, once approved, a share of the protocol's fees in THUSD. That creates a feedback cycle. Activity fuels ownership. Ownership fuels revenue. And revenue feeds back into the system. It's a model designed to build long-term alignment between the protocol and the people using it. No quick pumps, no forgotten airdrops. If the AI allocator and vaults perform, TRWA becomes more than just a token. It becomes a claim on the success of the entire machine. Who's using it? The road test. Now that we've seen what powers the car and how the fuel moves, let's pull it out of the bay and see who's actually driving this thing. Because the kind of driver tells you everything about the machine. Tharwa isn't chasing hype traders or weekend speculators. This is a car built for serious operators. And right now, there are 3 types of drivers holding the wheel. First, the DeFi yield crowd. These are the on-chain pros. They already know how to use MetaMask, how to LP on Curve, and how to chase real yield without taking degen risk. They're parking their stablecoins inside Tharwa's vaults for a steady 7 to 10% return. They like that THUSD is fully backed, transparent, and doesn't rely on token inflation to keep the lights on. For them, it's a clean lane away from the volatility of meme coins and algorithmic stables. Second, the accumulators. These are the long-game investors. They're buying TRWA, staking into STRWA, voting on governance proposals, and waiting for fee sharing to kick in. Some are retail users who want exposure to real-yield DeFi. Others are boutique crypto funds looking for the next infrastructure play, the next Maker or Aave-style governance token that actually earns something. They're not here for a quick flip. They're here to collect income from a protocol that behaves like a digital bank. Third, the institutional lane. This one's brand new to DeFi. We're talking about family offices, asset managers, and regional capital out of the UAE and Saudi Arabia. Investors who need compliance and Sharia alignment before they even open a wallet. They're using Tharwa's OTC rails, onboarding with KYC, and testing allocations from the regulated side. To them, Tharwa isn't crypto, it's infrastructure. A safe, yield-bearing product that finally fits inside their mandates. Across these lanes, Tharwa's community has grown into thousands of real wallets and millions in daily trading volume across exchanges like MEXC, Gate, and Uniswap. That's not viral hype, that's traction. So when we talk about who's using it, the answer is simple. Real users, real capital, and a community that understands yield over noise. That's what gives this engine its credibility. The right kind of drivers behind the wheel. All right, now that we know who's driving this machine, let's talk about how they got the keys. Because Tharwa didn't do a presale, didn't court VCs, and didn't run one of those blink and you missed it launchpads. They built traction the old-fashioned way, by rewarding the people who actually use the product. They called it Season 1, the Genesis airdrop. Here's how it worked. If you minted THUSD, held it in your wallet, or provided liquidity on Curve or Uniswap, you earned points. Those points converted directly into TRWA tokens once the snapshot closed on October 1st, 2025. Claiming was easy. Connect your wallet on the Tharwa app, verify your eligibility, and your tokens landed straight on-chain. 20% unlocked immediately. Gas in the tank for early users, while the remaining 80% vested linearly over 90 days. That stopped short-term dumpers and kept long-term holders in the race. And here's the important part. Tharwa isn't done. Season 2 is already warming up in the pits. This next round is expected to focus on real activity, vault deposits, STRWA staking, and liquidity provision. If you miss the first drop, the next snapshot is your shot. Use the product, Stay active, and you'll likely make the cut. No hype bots, no pay-to-play insiders, just proof of participation. If you drove the car, you earn the keys. Farming and staking, the money pit. All right, now you've got the token in your wallet. The next question is, what can you actually do with it? Welcome to the money pit, the place where Tharwa turns tokens into torque. This is where TRWA stops being a souvenir from the airdrop and starts earning its keep. It's not about chasing degen APYs, it's about consistent asset-backed yield. Here's the setup. You head over to tharwa.finance, connect your wallet, and drop your TRWA into the STRWA pool. That S stands for staked, and it's your ticket to governance, boosted yield multipliers, and eventually a slice of protocol revenue paid out in THUSD once regulatory clearance hits. Now, there are two ways to farm, depending on how you like to drive. First, THUSD vault farming. This lane is for stability junkies. You deposit THUSD into Tharwa's yield vaults, each one backed by diversified real-world assets, gold, sukuk, treasuries, and property. The AI allocator handles the rest, constantly rebalancing for the best combination of safety and return. Typical targets run around 7 to 10% annually. That's not magic. That's real cash flow from actual assets. Second, liquidity farming. This lane is for the DeFi drivers. Provide liquidity with THUSD pairs, usually THUSD/USDC on Curve or Uniswap. You'll earn swap fees, and when incentive programs are active, TRWA bonuses on top. It's riskier, but it pays more. And you're directly helping tighten the stablecoin's peg. Both routes feed into the same flywheel. Users stake TRWA. Stakers stabilize the protocol. Stable protocols attract more vault deposits. Vaults generate yield. That yield, over time, flows back to stakers. No made-up emissions, no trust me returns, just a functioning economy built on real-world performance. And once the revenue-sharing switch flips fully on, staking becomes more than governance. It becomes passive income. It's not about hype. It's about holding an asset that actually earns while you sleep. So whether you want to farm vaults, provide liquidity, or just stake and sit tight, Tharwa's Money Pit gives you a way to make the engine work for you. ChatGPT said, here's the updated and fully rewritten Lulu's Dyno report scene. It now starts with your line, now we're at everyone's favorite part, the money, and includes your new transition line before the Black Swan section. Now in this garage, we show you both sides of the coin, not just hopium. It flows naturally, has cinematic pacing for the avatar, and balances hype with realism. Lulu's Dyno report, the money scene. Now we're at everyone's favorite part, the money. Let's talk about what this thing could actually be worth, and what the world looks like in each lane. Tharwa's current market cap sits around $70 to $75 million, with about 7 billion tokens already in circulation. That's our starting line, before we talk potential top speed or mechanical failure. We'll break it into 4 lanes, from slow cruising to full throttle moonshot, so you can see the full track ahead. Scenario 1, cruise control. This is the calm lane. Markets stay stable. Bitcoin and Ethereum hold their gains, and real-world asset adoption continues steadily. Tharwa's vaults grow to between $25 and $50 million in deposits. THUSD holds its peg, liquidity deepens on Curve, and governance becomes active but not explosive. The brand earns a reputation for reliability, the steady hand in a volatile market. In this world, TRWA's value compounds quietly. Market cap pushes toward $150 to $250 million, a solid fundamentals-only climb driven by trust and performance. Scenario 2, 1% dominance. Now the spotlight turns on. The RWA narrative takes center stage across DeFi and mainstream finance. Tokenized treasuries, real estate, and commodities dominate headlines. Regulators are open, and compliant protocols start leading. Tharwa's vaults break the 100 million line. Fee sharing activates for STRWA stakers, and THUSD integrates with other DeFi platforms. Institutions in the Gulf and Asia start using it for cross-border settlements, and Abu Dhabi cements its position as the RWA capital of the crypto world. In this version of reality, TRWA becomes the regional infrastructure token, a name every serious investor knows. Market cap climbs into the 300 to 600 million range. Scenario 3, full throttle moonshot. This is the dream lane. Everything goes right. Global liquidity floods back, interest rates ease, and tokenized assets become mainstream financial tools. Tharwa's vaults surge past $500 million, with reserves published quarterly and regulatory partnerships expanding across continents. TUSD trades seamlessly on multiple chains: Solana, Arbitrum, Base, and shows up inside lending markets. Family offices and fintech firms start using it as a bridge between traditional and digital finance. At that point, Tharwa isn't just a DeFi protocol, it's the flagship RWA brand of the Middle East. TRWA breaks through the $1 billion market cap, sitting alongside Maker and Frax as a pillar of tokenized finance. Scenario 4, Black Swan blowout. Now in this garage, we show you both sides of the coin, not just hopium. So let's talk about the bad lane. A market shock hits. Maybe a major RWA protocol somewhere fails an audit. Maybe regulation gets heavy-handed or liquidity dries up across DeFi. In that world, vault growth slows or reverses. Fiat USD's peg comes under pressure, liquidity thins, and incentives rise just to keep users in the system. TRWA's market cap could slip under 25 million, and recovery would take months of clean audits, strong communication, and patience. It's not fatal, but it's a long rebuild. Now, I know the numbers sound exciting, but before you go aping in, let's take a breath and run it through the dyno. 70 million market cap today. Maybe $1 billion machine if everything fires perfectly, or a long pit stop if the market stalls. This is where we separate the torque from the talk. Technology, 8 out of 10. Modern architecture, real AI automation, and actual RWA integration. It's DeFi with structure, engineered, not improvised. Team and leadership. 8 out of 10 doxed professionals with real-world credentials. Finance, law, operations, these aren't Telegram handles. They're operators with track records. Tokenomics, 8 out of 10 fixed supply, community-heavy distribution, emissions tied to real use. It rewards participation, not hype. Product delivery, 7 out of 10. Mainnet's live, vaults are running, but integrations are still early. Needs deeper DeFi traction and more visibility outside the region. Community, 6 out of 10. Smaller, serious, and professional, which is good, but still early stage. This thing hasn't hit critical mass yet. Narrative and timing, 9 out of 10. AI plus RWA. That's the theme of the cycle. The market wants it, the timing's perfect, and the story sells itself. Adoption, 6 out of 10. Thousands of wallets, growing daily, but far from household status. This next phase determines if it becomes a staple. Regulatory position, 8 out of 10. Abu Dhabi base, Sharia compliance, and early communication with regulators give it a rare legal advantage in a messy sector. Alpha potential, 7 out of 10. If the vault yields stay consistent and the AI allocator proves its worth, TRWA could mature into a blue-chip token. Add it all up, and Lulu's Dyno score comes in at a 7.5 out of 10. That's strong. Balanced performance, not a moonshot fantasy. And before anyone screenshots this for Twitter, let's be clear. Lulu's our market mechanic. And yes, she's a pig. 4 hooves, curly tail, and a better sense of risk than half the influencers out there. None of this is financial advice, just the honest read from the garage. From where Lulu stands, Tharwa is one of the few machines in DeFi built for endurance. It's not hype, it's horsepower. And that's the Teardown on Tharwa, a protocol built like a hypercar, engineered in Abu Dhabi tuned for compliance and designed for the long haul. It's sleek, it's steady, and it's got potential. But the race is just getting started. If you liked this teardown, hit that like, tap follow, and share it with your crew. Tell us what you think. Is Tharwa the next blue chip RWA play, or just a prototype waiting for its first real race? As always, none of this is financial advice. Trade smart, manage your risk, and never bet more than you can afford to lose. The tank's full, the tires are hot, and the track's clear. Let it rip. Garage out.